Now, on the 4th of March, the bond yield on a 10-year South African sovereign note was 9%. 12 days later, it stood at 10.7%, and it's still rising. The markets, coronavirus damage, are all leading to the JSE losing more than 4 trillion rand, coming down to 13 trillion. So where is the bottom of the market, and how will we know when we get there? Now, joining us to unpack this bond story from Cape Town is Rashaad Tayob, portfolio manager at Abax Investments. And in Johannesburg here, we have Zwelakhe Mnguni, the chief investment officer at Benguela Global Fund Managers. Now, basically, guys, I mean, this bond is one of the stories of the week. It's one of the stories of the decade. In fact, bond yields are the highest they've been since the financial crash of 2008. Start off with you, Zwelakhe. How are you seeing it?
Yeah, I think there's definitely been a lot of value destruction as a result of the fears on the COVID-19. But I think we have to be clear that the market was already under pressure from beginning of January, mainly because there had been a lot of high expectations around Chinese growth and the US growth. And I think those growth expectations were starting to be revised down, and we saw market moving down. So what COVID-19 did is it just exacerbated what was an already bad situation. And I think we saw vulnerable economies like South Africa, their markets getting decimated.
Okay, and if I can go to you, Tayob, in Cape Town. I mean, the reason what's driving up this bond price is the yields. I mean, when you look at the FTSE and the Johannesburg Stock Exchange, they are only just outperforming inflation. It seems like an attractive prospect that's likely to become more so as time goes on.
Yeah, so the market dislocation we've seen, I think it's in percentage terms, it exceeded that of the 98 financial crisis. In fact, our yields are up around 300 basis points, which, I mean, even when Nenegate happened a few years ago, we thought those moves were extreme, but that was under 200 basis points. So this is quite an extreme move. And I think the reason for this is because South Africa went into this in quite a weak position. You know, we had the budget in February, and it showed that our debt situation was untenable. We were relying on cutting costs, and we were still showing deficits of which were going to be close to 7%. So when you go into a weak position like that and you hit a global slowdown, I think South Africa has shown itself to be one of the weakest links in the emerging market space, and therefore we've been impacted to a large extent. But given that yields are now 12% in the 10-year area and 13% in the long end, the risk premium on SA bonds is extremely high. And you compare that to the front end, where the SARB has cut the repo rate from 6.25 down to 5.25 yesterday. Money market rates are low, so you're getting a massive risk premium for holding SA bonds. And there is some value in the market, given that we are pricing in essentially a debt crisis in our market. And if that doesn't materialize, then these are excellent levels and an excellent yield on government assets.
Well, if I can come back to you, Zwelakhe, here in Johannesburg, how much further do you think the market has to fall here? I mean, the South African Reserve Bank was saying yesterday that GDP is expected to contract by 0.2% this year, growth maybe 1% next year, and 1.6%, we're lucky, in 2022. But with this coronavirus now, things are likely to get a lot worse. What do you think?
Look, I think there are two things that are driving our South African market. So one is the global market. The second one is our own issues in the country. So I think the global market may probably start stabilizing in the next 6 months once there is visibility around the vaccine or a drug around the COVID-19, and we might see that improving. And our internal issues of growth, I think we still have a long way to go around that. And I think while our market might recover, I don't think we might recover the full value that we've lost, that, as you said, about 4 trillion. I think we would need to show a lot more evidence in terms of improvement economically for the market or global markets to give us some credit around the value that we are currently showing as a country.
Rashaad, if I go back to you in Cape Town, I mean, obviously people are lining up to buy bonds here at the moment. Where do you see the powerful money coming from around the world, especially in these difficult times?
Yeah, so the people haven't lined up yet. The selling pressure has been intense because you've seen flows out of emerging markets that are unprecedented. So in a short space of time, we've beaten any record in terms of outflows of emerging markets, and we haven't even come to the potential downgrade from Moody's next week. So the selling pressure has been intense, and local fund managers have probably been buying on the margin, but we are also quite unsure about what the top is going to be in yields, because the fundamentals in South Africa are quite poor, and the coronavirus and the growth issues are just going to make those worse. So I think that South Africa, if it had continues on its debt trajectory that it had shown in February in the budget, we were on our way to some sort of debt crisis, some sort of IMF type program within a 2 to 3 year horizon. That was our base case. The thing is that this crisis has effectively brought that forward, such that I think we need a proper restructuring and reform program, either ourselves or under the guise of an IMF type program, in order to regain credibility. In this new paradigm, we can't continue to the way we've had in terms of spending, in terms of how the proliferate just spending and excessive amounts of spending, and expect the bond market to just adjust and absorb all the debt that we need to issue. The paradigm has shifted in a very short space of time.
Well, if I could just come back to you again, Rashaad, before we go back to Zwelakhe. I mean, you're saying that it would help to go to the IMF, but in the jittery world where, I mean, the Dow and the S&P have had their worst day since 1987, isn't it going to be also a vote of no confidence that this government can dig the South African economy out of its low growth trap?
So the IMF, South Africa's in a good, South Africa, if we had to go to an IMF type of program, it wouldn't be under the context of needing to necessarily borrow massive amounts of sums for the IMF. We had a very large pool of local savings. We got a big liquid bond market, but unfortunately we've got a fiscal position which is very weak, because the government spending has just been excessive for the last decade, built up under the Zuma administration, and unfortunately even post-Zuma we haven't been able to rein in spending, even as revenue has been flat. So what we need to do is impose some level of fiscal discipline and get a new framework, and we have not been able to do that. So whatever means under which we can achieve that, we have to try and attempt that avenue. And the IMF is just one means whereby it's not whether they give us $1 or $2 billion. We don't have a big dollar debt problem, but whether they give us the framework to say we need a salary freeze, or even now, I mean, we were talking about salary freezes in the February budget. We probably need government civil service salary cuts in order to rebalance the framework, because at the end of the day, given the economic situation we're going into, just having a job, I think, you're going to be in a good position. So the crisis that we envisage has actually just been brought forward by 2 to 3 years, and we actually have to face the consequences now.
I'll go back to you, Zwelakhe. I mean, you heard Rashaad talking there about how the economy could do with salary cuts of the civil service. Tito Mnguni mentioned as much in the budget, but really, in reality, it's going to be a very, very difficult political maze to negotiate. How likely do you think that South Africa can cut down its public expenditure to help with growth?
Look, I think there's a massive challenge in that regard in terms of cutting, and I think even though they made a promise that they will cut, I think 60 billion rand a year, I definitely doubt that they would be able to achieve all that. I think the great challenge that we are faced with is there aren't there isn't enough investment on the ground to basically create jobs that will drive consumption, and that investment in itself being a positive factor on the GDP. I think we don't have those numbers, and I think they account for quite a big component of our GDP. So I would certainly say that there is a need for a rethink on a strategy from the government. So one of the things that I think the government is not using enough incentives to try and offer investors the benefit to basically invest in the country. So I think one of the key things would be for them to bring those incentives and help the investors gain confidence and put money on the ground.
But Rashaad, if I can go back to you in Cape Town again, I mean, whatever happens, this risk premium that South Africa seems to be facing when it comes to buying bonds or investing here, it's going to go up and up as time goes on and growth continues to struggle.
Yeah, I mean, I think that if what I disagree with my colleague here is that at the end of the day, we don't have the choice anymore. So we've had the choice over the last decade to control the fiscal situation and control the excessive spending. We've had the choice to restructure Eskom and make sure that it runs correctly. We've had the choice of restructuring SAA. So we've had a period of time where it was an option to make all these changes. Unfortunately, when your bond yields are sitting at 12 and 13%, you don't have choices anymore. You actually have to do something immediately. And in a budget which handed 16 billion to SAA needs to change. They pencil that in. Unfortunately, the dynamic has changed so quickly, we actually just can't do that anymore. So I think that all the difficult choices have to be made. Otherwise, that risk premium will be high. I think it's already 12 and 13% bond yields is already telling you you have to make these changes immediately. But if you don't make them, the bond yields will go to 14, 15%, and they will continue to go up until you actually make those changes, because people will not buy into, however high that risk premium is, people will not buy in unless you have a credible plan to restructure and get things back on track in South Africa.
Well, I've got one last question. Sorry, Zwelakhe, you're going to respond to that.
What I was going to say is that I don't think this administration has any ability to actually move that fast. And I agree with Rashaad that they actually need to act quickly and act right now. But the challenge is they don't have that
CIO
scope.
Well, okay, but I've got a question to ask both of you just before we go, very briefly. I was speaking to a very highly placed government insider in this very building yesterday, and he still believes that Cyril Ramaphosa is getting fundamentals in place, albeit slowly, but he thinks in 5 years this country's economy ready to take off. Do either of you agree with that? Starting with you, Rashaad.
Yeah, I think a lot of people have been disappointed with President Ramaphosa's implementation. We gave him a lot of leeway when he became ANC president. We said, look here, we're going to have to wait until the election. Then about a year ago, we had the election. But effectively, things have just moved too slowly, both from him, from the finance ministry, from restructuring Eskom, for example. So we've had the luxury of time, but unfortunately, this event, this shock to the global economy has meant we do not have that luxury anymore. So I feel that we've reached an inflection point where we do need to take action. And unfortunately, we're not seeing that as yet. And I do hope that we see that in the coming weeks.
And lastly, very briefly from you, Zwelakhe, do you agree? 5 years' time, it's going to take time, it's going to turn around?
I don't think we have that. We have 5 years, as Rashaad said. We actually have only now, it's a matter of weeks and months that our decisions have to be made. I therefore think that the bond yields may actually continue for a while rising until there's a credible plan in place. And I think the structure of the government or the governing party is that he cannot make decisions willy-nilly at the pace that is needed. He has to consult and do all those things. And that consultation takes time. It's probably going to take a year for him to implement anything meaningful.
Thank you very much indeed. That was Zwelakhe Mnguni, Chief Investment Officer at Benguela Global Fund Management, sorry. And joining us from Cape Town was Rashaad Tayob, Portfolio Manager at Abax Investments.